In early 2020, the electric car company Tesla saw its market capitalization rise to $92.24 billion, more than GM and Ford combined. However, according to U.S. automaker estimates, Tesla was only expected to have sold $24 billion worth of cars in 2019, compared to Ford's $144 billion and GM's $138 billion. So what gives? This disparity is a good case study for understanding stock valuation. Stocks are priced like other goods or services. It all depends on how much people are willing to pay for them. There are a few things that influence the value investors put on a stock. One of the most important is earnings. Investors buy a stock because it gives them a share of ownership in the company and the right to share in the company's earnings. This may come to them in the form of dividends or price appreciation. Investors don't just buy a piece of a company's current earnings, but a piece of the company's potential future earnings. One metric investors use to determine how much of a stock's price is based on future expectations is the price to earnings, or PE ratio. The PE ratio compares the current price per share to the company's earnings per share, or EPS. For example, a PE of 20 tells investors that at the current rate of earnings, it would take 20 years to recover their investment. Another way to think of it is investors would be willing to pay $20 for every dollar of earnings. So if a stock has a high PE, it suggests that investors expect earnings to grow rapidly and that they're willing to pay a lot to get a piece of that growth. However, stocks can have a negative PE if the company isn't profitable. Consistent negative earnings are often a red flag for investors, but they can be less alarming from new or fast-growing companies that aren't yet profitable. Could that be the case with Tesla? On January 16th, it had a PE of negative 94.73, while GM's PE was 6.05 and Ford's was 24.97. The fact that Tesla is valued higher than Ford and GM, despite not even being profitable, suggests many investors have high hopes for Tesla's future earnings prospects. Perhaps investors anticipate a big shift in consumer behavior toward more eco-friendly electric cars and away from old smoke and choke combustible engines. Years ago, Netflix was in a similar situation. Instead of changing the way people drive, Netflix was trying to change the way people watch TV. At one point, Netflix had a PE above 650. Over the years, that PE fluctuated drastically. However, investors who held on to Netflix were rewarded for assuming the higher risk because Netflix earnings grew at a rapid pace. Of course, that future growth is definitely not guaranteed. High prices can be driven more by speculation than solid financial analysis. If you were surfing the internet in the mid-90s, there's a good chance you were using a browser called Netscape because it held 80% of market share at the time. On its IPO day, Netscape was expected to sell for $28 per share, but high demand for company shares delayed the trading for nearly 2 hours. However, Netscape wasn't even profitable, but the focus was on future potential earnings. Microsoft countered Netscape by giving its browser, Internet Explorer, away for free. Netscape never lived up to the hype and dwindled over the years until it was bought out by AOL in March of 1999. So what is history telling us? To be mindful of future earnings when dealing with high-flying stocks. For example, many companies like Ford and GM have been around for a long time and have seen competitors come and go and are already making their own electric vehicles. Tesla may lose market share and some of those future earnings as well. Even Netflix isn't out of the woods. It's seeing rising competition from Amazon Prime, Disney+, Hulu, and more. This is why a diversified portfolio is important. It allows you to take risk on a stock with greater potential, but also keeps the majority of your money in safer investments. Diversification can keep your portfolio humming, even if it's not firing on all cylinders. Thanks for watching. TD Ameritrade is here to help you better understand the strategies you need to pursue your financial goals. To stay up to date on new videos, please subscribe. Be sure to follow us on all your favorite social media platforms and open a TD Ameritrade account by clicking the link in this window.